Very good morning, Ankur. Well, it was a winning week on Wall Street as investors cheered the White House's deal with China to temporarily slash levies. The agreement was seen as a breakthrough for global trade after Trump's initial plan for broad and steep import taxes was unveiled last month. Now, last week, the technology-heavy Nasdaq composite led the way, surging more than 7%. The broad S&P 500 jumped over 5% and posted a 5-day winning streak. The blue chip Dow Jones rallied more than 3% last week. And, Friday's gain of over 300 points pushed the 30 stock average into positive territory for 2025. However, stock futures fell Sunday evening as investors responded to Moody's downgrade of the U.S. credit rating. Now, Moody's has bumped U.S. rating down by one notch to AA1 from AAA, bringing the agency in line with its peers. Now, the firm has cited financial challenges tied to the federal government's growing budget deficit and ramifications of rolling over existing U.S. debts in a period of high borrowing costs. Meanwhile, today investors will monitor speeches from U.S. central bank officials such as Atlanta Federal Reserve President Raphael Bostic, New York Fed's John Williams, and Dallas Fed President Lori Logan scheduled throughout the day. Now, leading indicators data is due later in the morning for U.S.
Right, US futures did fell due to the surprise, in fact, a shock from Moody's downgrade on US, but oil prices rose more than 1% on Friday, posting a second consecutive weekly gain due to easing US-China trade tensions. Brent crude futures rose more than 1% to close at $65 a barrel. US WTI crude futures gained almost 1.5% to settle at $62.5. Both contracts fell more than 2% in the previous session following a sell-off on the prospect of an Iranian nuclear deal. Brent and US crude gained more than 2% for the week. However, if you talk about the nuclear deal, US President Donald Trump said the United States was nearing a nuclear deal with Iran, with Tehran sort of agreeing to its terms. However, as per reports, there were still issues to resolve in this deal. Adding to market concerns was an expected surplus. The International Energy Agency on Thursday hiked 2025 global supply forecast by 380,000 BPD as Saudi Arabia and other OPEC members unwind output cuts. The IEA also projected a surplus for the next year despite a minor upward revision for its 2025 global oil demand forecast, and that is by 20,000 BPD. Gold prices, however, dropped more than 2% on Friday and was set for the worst week since November as increased risk appetite from US-China trade agreement weighed on the market. Spot gold fell 1.6% to $3,188 an ounce and was down 4.1% last week overall. Last month, prices had reached a record high of $3,500 amid escalated tariff tensions, and US gold futures settled 1.2% lower at $3,187. As a result of easing of US-China trade tensions, the Wall Street's three main indices witnessed weekly gains, fueled by growing investor risk appetite after a long period of uncertainty and relatively lower focus on gold.